bad news has been the market declines amid jitters that this AI revolution may be a bit of a bubble that is likely to burst. The good news comes from Elon Musk in a little panel discussion that he and Jensen Huang of NVIDIA had at the U.S.-Saudi investment confab. The good news is that none of it matters. Jim Iuorio is about to be made obsolete, so let's enjoy him while we have him momentarily, because work and money, optional. Elon Musk.
Where will things end up long term? I don't know what long term is. Maybe it's 10, 20 years, something like that. For me, that's long term. My prediction is that work will be optional.
Optional.
Optional. So
we'll take that.
Yeah. I mean, it'll be like playing sports or a video game or something like that. If you want to work, in the same way, like you can go to the store and just buy some vegetables, or you could grow vegetables in your backyard. It's much harder to grow vegetables in your backyard, but some people still do it because they like growing vegetables. That will be what work is like, optional. Now, between now and then, there's actually a lot of work to get to that point. Mm-hmm. I always recommend people read Ian Banks' culture books to get a sense for what a probable positive AI future is like. And interestingly, in those books, money doesn't exist. It's kind of interesting. And my guess is, if you go out long enough, assuming there's a continued improvement in AI and robotics, which this seems likely, the money will stop being relevant at some point in the future. Now, there will still be constraints on power, like electricity and mass. The fundamental physics elements will still be constraints, but I think at some point currency becomes irrelevant.
Interesting. I didn't know he was an Ian Banks fan. I haven't read all of his books. Surface of Games, I think, is the last. Surface Detail, I think, is the last book. The Player of Games is the other one I read. Surface Detail, which is maybe, I don't know, 10 years old or some such thing. But yeah, he's pretty good. But anyway, that's not the lead. The lead, of course, is that work is optional. I'll be very much like growing my own vegetables. Even when work is optional, I will still be ranting into a microphone, so you can count on that somewhere, just because I enjoy it. But Jim Iurio's shelf life is about 10 years, and then it won't matter because work will be optional and money obsolete. So, again, let's give Jim Iuorio a proper send-off. Jim, the host of the Future's Edge podcast, special contributor, wirepoints.org. Jim, thanks for joining us. Appreciate it.
Thank you for having me. That sounds like a horror movie where work is optional. I mean, I don't think people really understand the psychological condition of people. You need to feel that you're plugged in and useful. If you give people free time, that is a disaster. And the way all those people clapped about not working, it's like we're in some sort of dystopian weird spot, which, by the way, AI, I use AI quite a bit in a lot of the things I do. The force it is going to come with is staggering. And this is something that I think should frighten people a little bit. And I'm not normally one who gets frightened by a new technology. I believe in Adam Smith's invisible hand. One technology comes in, creates other opportunities. But this one's a little different. This one is weird to me that it could replace a lot of the thinking we do.
Well, I mean, to be fair, most of those people clapping about the no work future are Saudi princes who don't really work all the work they do is just spending the oil money that comes rolling in on a daily basis. But yeah, no, the idea of I don't even really understand what he's saying in a sense, because I guess there will be just so few high-skill technical jobs needed to ever innovate technologically to serve the AI beast that everybody else's jobs, the workaday jobs or the manual labor or being a radio talk show host just gets automated, I guess, right? That must be what he's talking about.
To me, it's sounds like the plot from Idiocracy. And and I believe that was a prophetic movie where a bunch of people who just are a bunch of idiots,
Yes.
and that really just depresses the heck out of me.
Yes, yeah, right. Definitely recommend all of Matt Judge's work too. While we're on the topic of recommendations, but I mean, so just on the other side, since money is still relevant at present here, the AI bubble concerns. Do you share them?
Sure. Yeah, I absolutely shared them. And I thought yesterday's NVIDIA earnings was going to be a big thing. So here's why I think we're in some early stages of a bubble. And yesterday confirmed to me that it was an early stage. When Bitcoin and cryptocurrency 2 weeks ago started to head lower for whatever reason, I think there was some sort of whale selling, they started to drag the NASDAQ down with it. Now, the NASDAQ and cryptocurrency world have been trading in a correlation, but that's normally NASDAQ leading the way, not following. And when it followed lower over the last 2 weeks, I thought, okay, that's indication number one that we're in some level of stretched positioning. But what I wanted for confirmation is if NVIDIA posted good earnings, which they did, and then the stock got sold, not bought, I would believe the bubble was deflating some. But that's not what happened yet. And again, I still, it could be a couple days after the NVIDIA earnings that the market turns around, and that will indicate to me. So I'm kind of on pins and needles, seeing if there's confirmation of early stage bubble.
Yeah, but I mean, but what is the basis to believe that it's a bubble? We've been talking all this time about the revolution, and you have Elon Musk talking about the elimination of work within our lifetimes, hopefully, and now it's no, the whole thing is a bubble that's about to burst.
No, because the bubble isn't in the technology. Any new disruptive, wildly good or at least powerful technology has some sort of a bubble stage. The internet did that too. And then all of a sudden the internet stocks lost 80% of their value. And what were we left with? We were left with the technology. The internet itself still existed. And that'll be the same thing for AI. So when we talk about a bubble, you have to separate that. It's about the maniacal fervor in the stock price and people buying it and not really respecting the fact that things go up and down and things can become people can become overzealous in markets as well. That's what I'm talking about. I think AI, the technology, is here to stay. I just think there's an enthusiasm for the stocks that might be a little too hot.
Well, but I mean, the enthusiasm for capital raising and investment in AI is not subsiding at all. So why would the enthusiasm? And I think it's probably too early for most people to have a real good opinion about who the winners and losers are going to be in this arms race, this AI arms race. So why would the stocks, retreat?
Just because of market positioning, there will be a point where the story won't change. The story is still this wild story, and people are going to need AI, but the prices might get ahead of themselves. Which something that's interesting too is that when everyone looks at the AI trade from an investment standpoint, the first 2 years of it, 3 years of however long we've been in it, it's who is making the chips, who is making the AI itself, and that might not be the real investment story over the next 10 years. It might be what companies can incorporate AI and make their own processes more efficient and more productive, like companies like Walmart and John Deere, and even like agriculture companies that are using AI. Those might ultimately be the winners. Banks, although I'm not a big fan of banks right now because I think the economic condition is starting to slow a little bit, but eventually banks are going to be using AI to make their, and again, this all circles back to tons of people losing their jobs within the service industry, which is a potential thing happening here. Again, I'm not certain that's going to happen, but it seems a little scary to me.
So we're finally getting the September jobs number this morning, and it's projected to be for September around 50,000 jobs, which seems like pretty anemic. But again, it's data that we talk about and the market reacts to, even though we don't have a lot of confidence in it. So I'm not sure how much weight to give it in terms of thinking about what's really happening. But how much weight do you give that number, even just sort of directionally?
Personally, I give no weight to it, but I wrote an article about this a couple of weeks ago for a CME group, because the reality of it is that even if every of the thousands and thousands of market participants, the big and small, if every individual knows that this is relatively corrupted data. But then they also think that everybody else is going to trade off this data and market position off this data. Then we're forced to jump right in. So it's like almost watching a movie and you suspend disbelief because you believe everyone else is suspending it as well. So we will trade off this number. You mentioned 50,000 as somewhat of an anemic number. I'd be relatively happy with 50,000. I think in a time where our population is kind of stagnant for, again, I'm not even trying to be political about the mass deportations, but we did have an issue over the last few years where labor was coming in. So were criminals, obviously. But that 50,000 might be the new right number for the moment, considering our population. J.P. Morgan said we lost 50,000 jobs in October when they came out about a week ago. Goldman Sachs said the same thing. So I think 50,000 would be a good thing, not a bad thing.
I'm talking about income inequality because, it's the order of the day for the left all the time, and they seem to be able to leverage class envy effectively, at least in big cities. An interesting post, this is not going to come as a surprise to you, it didn't to me either, but from an editorial writer over at the Amazon Post. And he just posted, for the millionth time, the middle class is, the quote-unquote middle class, is smaller because the upper class is a lot bigger, and the lower class is smaller too. Looking at the household income, 50,000 or less, 50 to 150, and 150 and up. And what's happened over the last 50 years is those making 150 grand or more in inflation-adjusted dollars, 2024 inflation-adjusted dollars, have gone from 5% of the population to almost 34% of the population. So, 7x increase. Those making between 50 and 150, again, inflation adjusted, have declined from 56% of the population to 45%. Those making 50 or less have declined from 38% of the population to 21%. So what you've seen is significant upward mobility if you break out the economy in three parts of household income like that. So that's just the data. But something Joe Lonsdale, the great venture capitalist, said about this. The U.S. upper class has been growing a lot, but social media has made those not doing as well angrier about it. Regardless, much in the U.S. is broken. We can and must do a lot better. Must do a lot better job lowering costs and helping the middle and working classes succeed. Just get your reaction to that in this discussion about the distribution of household income.
So there's one thing, okay, we're talking about income, but I think the real story is assets. The top 30% of the people in this country own about 95% of the stock market. Okay, what's happened from when back in 2020, whatever nonsense was going on there, and their solution was to throw $9 trillion additional dollars into the economy. So what did that do? And all the asset holders, the 30 to 40% of the upper class, whatever I'm doing air quotes, everything they own has gone through the roof. Everyone else, all they've got is higher grocery bills. You mentioned wages, and wages are increasing too. But wages increase, people want to think, oh, my standard of living is going to go up, and then they look and the price of beef has doubled, and they realize it hasn't. So, and then social media, without any question, exacerbates that as well. But actually, I do think the 60% non-asset holders have a real beef, because for 10 years, the Fed started telling us why and how they were going to cause inflation, because they needed inflation. I know now they're talking about like, oh, gosh, I don't know what happened, how we got all this inflation. They caused it on purpose to bail out indebted government entities around this country. They had to do it in their mind to monetize that debt. So people being mad is real and is right. And we saw that's why you have socialists winning election. These are people who want to burn it all down. There's nobody who thinks that socialism is the right thing. They're just like, the heck with this. The system isn't working for me, so screw it.
Before we let you go, I did want to get back to Bitcoin, since you brought it up. So Bitcoin is off about 25% in just the last couple of weeks. Does that shake your confidence at all in crypto, or is the belief that, look, you can't fight City Hall and there are just too many big players that are now all in on crypto for it to go anywhere anytime soon?
That's my thesis for owning crypto, was broad adoption, particularly on the institutional level. When BlackRock several years ago said they were getting into the space, I got into the space as well. But shaking my confidence in it is a funny question because I don't really have a ton of confidence in the technology at all. Everything is just based on this kind of shared belief that it's going to go up. It's no more. I have no more confidence in Bitcoin than I do in artwork or Beanie Babies or tulips or anything else that the crowd decided was valuable. Now, I'm not even making fun of those things too, because gold you could put into the same category, and gold has continued to be a store of value for thousands of years, despite the fact having very little intrinsic value. So I'm still in Bitcoin, but the fact a 25% move, that's what this asset does. I'm not even remotely scared about it. By the way, I stopped buying. I know you know that every Wednesday I just had a systematic buy order put in. But about 2 months ago, I stopped with that just because I never wanted my position in crypto to be more than like 2% of my net worth. And because of the huge rally, it got higher than that. So it was just kind of a mathematical calculation on my part. Does that make sense?
Yeah, it does. And speaking of that, I mean, the Beanie Babies allowed Ty Warner to buy that nice hotel in Santa Barbara. So, don't go knocking Beanie Babies as an investment.
Knocking Beanie Babies. Absolutely.
That's right. Jim Iuorio, host of the Futures Edge podcast, a special contributor to WirePoints, wirepoints.org. Jim, thank you as always. Appreciate it.
Thanks for having me.
And Jim joined us on the Turnkey.pro answer line.
It's like a hot, steaming cup of information to start your day. It's Chicago's Morning Answer on AM 560. The Answer.
I'm attorney Stephen Leahy. You probably know I help business